Yes, there we are. All right, we're live. Okay, so welcome everybody. We're live on Facebook. This is Real Talk, what today's data means for buyers and sellers. This is June 12th, 2025. We are professionals giving you up to date information and insights so that you can make informed decisions to meet your real estate goals. So that's what the main goal here is. We're not showing cleavage, we're giving real information and insights. My name is Luis Sanchez. I'm a real estate agent and broker. I'm based in Los Angeles County and have done business all the way from California City to Big Bear, San Bernardino, Riverside. And with me, I have this distinguished guest, Alex Islas. Can you please, Alex, thanks for coming on and briefly introduce yourself?
Well, Luis, thanks for inviting me. My name is Alex Islas. I am a mortgage broker. I'm based in Pasadena, but work all over. We do loans all over the place, even across different states. Um, so that's what I do. Luis finds you the place, and I help you finance it.
All right, perfect. And then just so no one has any doubt, Alex and I have a couple of clients that have worked together. And so Alex has some specialty loans that he has helped with those clients. He has a network of investors that he has that actually gives loans to the borrowers. He has various types of loans, but I think that's a very unique situation where the investor that's actually giving the loan can actually speak to the borrower, which was in a recent case that of a client that we have. Alex, do you want to say anything about the loans you offer?
Sure. Well, we do everything from your conventional loans for W-2 employees to FHA loans to VA loans, your more traditional type mortgages. But we also do loans for people who want to buy investment properties, and those can be a little bit more unique um, type of loans. So some people want to buy a property quickly, or buy it and fix it and flip it. So we have those types of loans where, yes, Luis, we do have investors that we go to, not your traditional bank or mortgage company, but these are companies, private companies that will lend money, and you can speak many times directly to the lender or the investor.
Yeah. And then with this particular client, he is planning to sell the property. He's in a challenging personal situation, and you were able to give him a good loan to help him with his personal situation, so that he could end up selling the property. And so that's something that I think is definitely helpful to him and helpful to everyone involved. So thank you for
Correct.
that. Yeah.
Thank you. Yeah, no, that was a very unique situation. I'm glad we were able to help the client, um, and it kind of freed him up, and gave him a lot of confidence to be able to do what he wanted to do with his property, so he could further invest. Um,
Yes. Yes.
and that was his
And
goal.
yeah, and just the deal hasn't happened yet. It will happen, and we'll go through the whole thing as far as the what he ends up doing. But he's going to be able to the client will be able to have some funds to invest, is as opposed to selling the property as is. He's going to have some funds to be able to invest to make the property better. Let's say he invests 10,000. I'm confident, 100% guaranteed that he's going to make about 100 to 150 grand more than if he sold the property as is. So that was really good help to him and everybody.
Right. Yeah. Thank you. Glad
Okay,
we were
so
able to help.
yeah, so let me see the slides if we're able to. Yeah, okay. Next slide. So we're gonna go through some slides, just five points, five insights, and then Alex can share with us because he works with borrowers, buyers, some insights for borrowers, buyers, and I'll share what implications might be for a potential seller. So right now, mortgage delinquencies in our first quarter are at an all-time low. So it's at 2.8%. What that means is 2.8% of mortgages are 1 month behind. So previously, last year at the same time was 3.94. The previous year was 3.56. During the last downturn, the housing downturn, it was 2008 was 6.35, 8.22, in 2010, 2012 was 5.7 to 6.7. So it's a lot less right now. It's a lot less right now, and it's actually less than that because 30% of properties are actually paid off. So of the 70% that are not paid off that have mortgages, only 2.8% are behind 1 month. That doesn't mean that they're in foreclosure. For the foreclosure process, it takes 3 months to get a notice of default. This is extra knowledge, and 3 more months to give announce a trustee sale, and then after 3 more weeks to have that trustee sale. So they're not in danger of losing the property. So we have a situation right now, Alex, where there's not that many people that are behind on their mortgage, right? So for a prospective borrower or buyer, how might that does that have any effect on prospective borrowers or buyers right now?
Oh, sure it does. Sure it does. Being at historic lows, that means that people aren't as enthusiastic to sell their property or their home, right? A lot of different reasons. Main reason is values are really high, and a lot of these people got their interest rates at really historic low rates. During the pandemic, when rates were really low, so those people probably wouldn't sell right now, because if they sell, they're going to go, more expensive property and a higher interest rate. So that kind of what that does, then it limits the market. It limits a number of homes that are available, but we have a lot more buyers out there than homes that are available. Even still, I mean, I know the market's freeing up a little bit, but I run into my clients who are looking to buy, and they're getting outbid. But we have ways to help you compete, and we can talk about that in a little bit.
Okay. So then we don't want to have people get into this situation where they're not able to make their mortgage payment. So upfront, are there any, you guys pre-qualify the buyer to make sure that they're able to make the payment? You want to talk briefly about that?
Sure. So we ask for everything up front. If you're a W-2 employee, if you work for a company and you get a W-2 at the end of the year, then we ask for 2 years of W-2s, 2 years of tax returns, your last 30 days of pay stub. And, a lot of people think, well, it's a lot of information you guys want. Well, if you want to qualify for a loan and buy a home or an investment property, you need to have that information. And we need to have that up front. And I make it mandatory for all my clients to get me all that information immediately as we start the process, because we want to know how much you qualify for, right? We're here to help. We're not, we're not like you say in Spanish, we're not being metiches. We're here to help, right? It's like going to the doctor. You can't go to the doctor and expect, oh, doctor, am I okay? Well, do you feel okay? Tell me what's going on. We're not here to judge. We're here to help. So if we get all that information up front, we'll know exactly what you can qualify, the loan amount you can qualify for. Now, if you're a self-employed individual, you own a company, there are different types of loans, and we'll ask for different types of documents for the self-employed people. But for self-employed people, there are actually a lot more loan options than for W-2 employees.
Okay, perfect. So then let's just say somebody has this situation, like typically someone who is in this situation, the reasons on the right side, they have a job loss or layoff or business failure, medical emergency, divorce or death. Let's just say they get in that situation. Do you get, are there, what solutions might you have, or would you recommend for someone in that? Just
those are difficult. Life happens, and unfortunately, I mean, fortunately now, especially after the pandemic, you can reach out to your lender, even if you have a credit card. Reach out to the bank. Don't be afraid to reach out. What hurts people is not communicating, right? If you communicate with the lender or the bank, they're willing to help you. They're willing to work with you. I've seen it happen. I've had clients that these things have happened to them, and they started to fall behind on their mortgage, and they call me, oh my gosh, what do I do? I'm gonna lose my house. Like, no, let's call the lender. Let's figure things out. And more times than not, if you're upfront and honest with them, they're willing to work with you. I can't tell you exactly what they'll do, because I'm not, every situation is different. but more times than not, they are definitely willing to work with you if you are open and honest with them.
Mhm. Perfect. Perfect. Okay. So then, for the seller, if you're a prospective seller right now, you're not in the same situation as people in 2008, 9, and 10. In 2008, 9, and 10, there were a lot of people in foreclosure, a lot of foreclosed homes on the market, people who are upside down doing short sales. You're not competing with those distressed sales. So it's pretty, like right now is a pretty strong seller's market where you don't have those people that are way below market, competing against your home. You're going to have people that are strong sellers, strong owners that have a lot of equity in the property. So it's a good time. All right, next stat that's kind of relevant is that we have a housing shortage in the United States. So after 2012, there was less construction, so there was an oversupply of homes. This is from Realtor.com, and this is showing that there was an oversupply of homes for 2013, 2015, 2016, and then the building did not keep up with the population growth, and we have an undersupply of homes. They say that right now in 2024, even though, I'm sorry, 2025, 2024, there was a lot of homes that were built. We still have a strong undersupply because there's just not enough homes for the growing population. Another stat, so it's in 2 million homes, according to that slide from Realtor.com, there was 2 million homes short, 2.2 million. However, they have another estimate saying that there's actually a pent up demand of 3.8 million homes short than what actually is the number, because the number of households is decreased, or families forming, or people getting married or having kids. There's less of that, less households forming. So if you just take in consideration the number of people that are at the home buying age, or the age when families form, what they say is 18 to 24, the number should be 3.8 million. And just to meet the regular demand, it would take 7.5 years if homes are constructed at the current pace to meet the demand. So there's a lot of properties, a lot of people that need a place to live. And in the United States, not just California, there's not enough homes for them. So what's the implication for a prospective person who's of home buying age and looking to buy their home?
Well, this fits into the narrative of you're competing with a lot of people, right? Again, maybe there are a few more sellers right now, but you still have all that pent up demand, and you have a lot of buyers. Um, so even though you might have a few more homes on the market, you still have a lot of buyers. So that's what you need to do is set yourself apart from them. And how do you do that? So how do I set myself apart? Well, you come in with a very strong pre-approval letter, and not just a pre-qualification letter. We can underwrite your loan prior to you submitting an offer. So if you have a client, Luis, who has, they want to buy a home, and we know there's probably going to be 10 or 12 offers, because that's pretty probably average on the low end. Um, we can you submit your offer, we can set up your client apart by fully underwriting their loan before you submit the offer, and then cutting down the days of the offer. So standard uh, uh, escrow period is 30 days. If we underwrite your loan, if you provide us all the documents that we ask for, every single bit of documentation we ask for, we can underwrite your loan right away. And we can cut down that 30-day time to 21 days or less. I mean, I've closed loans in 2 weeks because I ask all my clients to get me everything up front. I've had, usually what ends up happening with my clients is, because we prepare early, and we're very well prepared once we get into escrow, we're ahead of the seller. More times than not, our clients are calling the seller and saying, "Hey, can we close early?" And that's a position you want to be in. You don't want to be in, "Oh, I need more time. I need more time to close my loan. I need more time to close this purchase." If you're the buyer, you do not want to be in that position.
Okay, so I'm hearing that you need the prospective buyer to give you all their documentation, have everything ready, so when you get the offer accepted, they're competing with all these other people looking for homes, and they have their offer accepted, they're ready to move. move
Right.
forward and move forward with with the transaction.
Right, and set yourself apart, because what ends up happening more times than not on a purchase, I will get a phone call from the seller's agent. And Luis, you probably do this too. You want to make sure that whoever is making an offer is qualified, and they're going to be able to, if you accept their offer, you want to make sure that they can afford to buy the home, and they have the loan set up, and they have the cash for their down payment. And so, Luis, if he were representing the seller and I'm representing the buyer, he's going to call me and say, hey, tell me about your buyer. Are they really going to get this loan? And if we underwrite your loan at the very beginning of the process, I can with confidence tell Luis, short of something going on with the appraisal, we'll close this loan very quickly.
Yeah, perfect. So then, like, just from the seller's point of view, that's kind of like explaining why you bought your property at a certain price and why it went up in value so much, because current buyers there's not enough homes. There's an undersupply, and so your home is worth a lot more than what you previously bought it for. And so you're in a position where you have a lot of equity, and you're gonna make out, I guess, on the sale of the property. Just like as you know, properties are going to go up in value. So whatever you sell it for in 2025, it's going to be worth more. You could have got more in 2026. You get more in 2027. You get more in 2028. It's going to go up in value. That's just the facts of how things work out. Okay. So then home purchase sentiment. So right now things are changing. This is home purchase sentiment from 2011 all the way to now. And you can see the perceptions of consumers on buying a home increased. It went down in 2019. During the pandemic, it increased again. It went down in 2022, and then it went up. It went down at the beginning of this year, but now it's creeping back up. Another slide related to that. People who think it's a good time to buy is increasing. In 2022, it was at 17%. And now recently it increased 23, 22, 23, 26%. There's more people now that are believing, that are feeling consumers think it's a good time to buy. And so what are your thoughts on that, or how does that influence prospective buyers in your view?
I think it's always a good time to buy.
Why is that?
Because we know that you can show a graph of real estate prices increasing over time, and if you have staying power, meaning if you can afford to pay your mortgage, chances are very, very high that your property value is going to go up and up and up and up. And people right now, that they'll call me and say, oh my gosh, I don't want to buy, interest rates are too high. Well, interest rates were higher in the 80s. My father-in-law told me when he bought his first home, he was paying, I think, like 14 or 15% interest. And think about that. He bought this property in the 80s. What do you think that property is worth, 40 plus years later? What if he said 40 plus years ago, said, you know what, oh, interest rates are too high, I'm not going to buy. I mean, properties literally went from, under $100,000 40 years ago to over $1 million today. So are interest rates high? It's all relative. I mean, they're higher than they were during the pandemic, but we had a global pandemic. They're probably never going to go to those rates again. So if you want to buy a home, it's always, if you can afford it, it's always a good time to buy.
Okay, cool. So then if the feeling of consumers is there's more, how you say, well, I could just say this specific example. Okay, we have a property listed in Phelan, which not getting as much activity as we would like. Last week, getting maybe like 1 or 2 showings every 2 weeks. Honestly, the market had kind of slowed down. Last weekend, we got 5 inquiries, and there were about 3 or 4 buyers that went to the property just recently, just a couple of days ago. And so that's showing exactly this chart that there's an increase in the perception or the feeling of that it's a good time to buy. It's summer and there's more buyers coming on the market. If we can assume that's going to continue, that more buyers are going to come onto the market, how does that affect? How do you see that affecting buyers, prospective buyers?
Well, just like in your example, right? At first, you didn't have many inquiries, and then all of a sudden, you're getting 4 or 5 offers. Um, who are you going to advise your client whose offer you're going to take, right? You're going to take the strongest offer. You're not necessarily always going to take the highest offer, um, but you're going to take the strongest offer. So the highest offer may not qualify for the loan, or may not have enough for the down payment. But if you make a strong offer with a strong down payment and a strong loan, you're going to set yourself apart, and that's who buyers want to see. Is at the end of the day, if you're or sellers want to see, if you're a seller, if I'm selling my property, I want to make sure whoever offer I accept, they're going to be able to close. And again, I go back to, it's very important to get all your documentation up front and get prepared early in the process. Don't go and start making offers and then we start the loan process. It doesn't work well that way. It works much better and you're much more competitive if you start the process early on.
Okay. All right, cool. So we also saw last month a little bit of a change in. We thought it seems like it's a change in the market. 37% of homes had a price reduction last month. That's the highest in 5 years. So people look online and they see down arrows, and sometimes they think, oh, well, the prices are going down. Prices are going to go down. I'm going to wait till the prices go down. And so that's why, we have this chart here showing that the average price in California has consistently gone up. So even though sellers are reducing their prices, when they close escrow, the closed escrows are going up, are going higher. They're going higher, and they're higher right now than they ever have been. So when you see 37% going down, that means that the sellers were asking more than the market value, and they just reduced their price as a result. Not that home values are going down. Anyway, so with that, with 37%, with a lot of properties sellers going down, how does that impact prospective buyer in your view, or borrower?
Um, Again, I go back to having a strong offer. I think people, what this shows is that people had this conception that, or perception, I'm sorry, perception that home prices were just going to, keep going straight up. I mean, they don't always go, they're not going to go straight up, right? So people had this, they inflated their sales price because they thought that they could get the price. Well, things got to have to come back down to reality somewhat. So home prices are still higher than they were. I mean, if you look at this chart, they're still higher than they were, 12 years ago, 10 years ago, 5 years ago. So are prices going down? No, I think people just, overinflated their asking price. But again, if you come in with a strong offer and you're under the asking price, but it's a strong offer, you have a good chance of getting your offer accepted.
That's right. That's right. And so a seller, like in this market, seeing that prices are the down arrows, a lot of times sellers feel that their property is worth more than what it is. Is reality. Market value. The definition of market value, just so those in case we're not watching understand, market value is when you put a property on the market and the property is not in default and the seller is not in distress and does not need a quick sale, puts the property on the open market, and the property has been on the market for a couple weeks, the highest price that a buyer will give when everyone has had access to the property, that is the definition of market value. So these 37% of sellers, they thought the market spoke to them. They thought their property was worth a lot more than what it was, and the market told them, no, it's not. You price it too high, and so they reduced their price. So that's just something for a seller wants to make sure that they price their property. If they want to sell it, they have to price their property. Listen to their realtor. Look at the qualitative and quantitative factors that go into pricing a property. When you see a property, when you see your home on a website and you see a price, it doesn't mean that a buyer is going to give you that price. You have to look at the actual features of the property, the ones that sold. look at the features of the ones that sold, look at the features with your property. How do they actually compare? And that's going to give you the ballpark price.
Yeah,
Okay.
and then going back to that, Luis, I mentioned, everything short of the appraisal for your loan, and if a home price is overly inflated, the appraisal will come back and it'll tell you what the market price is. If the appraisal comes in, if you put a home on the market for $1 million and the appraisal comes in at 900,000, the lender's only going to lend on that $900,000 number. So if you're the seller, you better hope that your buyer really loves that home and they're willing to put up the $100,000 difference in cash, or else you're gonna have to drop your price, right? And same thing if you're the buyer. If you're buying a home for $1 million and the appraisal comes in at 900,000, either you have to put up that $100,000 difference somehow, or go find somewhere else, another place to buy. So you got to be careful, and you do have to listen to your realtor when you list your home.
Okay, that's right. So then moving on, inventory. Right now, this stat came out that inventory is climbing. Active listings are now at a 66-month high. In the city of LA, there were 30,349 properties that were available, right? That's an increase of 42.1% from the previous year, right? And then 1,000 actually closed escrow, and that's like a little bit increase of only 12%. So there's more homes that are coming onto the market as compared to buyers that are actually buying them, where actually sellers and buyers are actually agreeing on the actual price. And so more properties available. That sounds good for buyers, Alex.
Yeah, no, absolutely. That's a great number for buyers. But again, I go back to, you got to come in prepared. You got to come in prepared to make that offer. Because these active listings are not distressed properties, so people might be testing the waters and testing to see what kind of price they can get for their home, but they don't necessarily have to sell the home, right, or their property. But if you really want to buy that, you gotta come in prepared. I can't emphasize that enough. Come in prepared with a good pre-approval letter, or a fully underwritten approval letter, which will make you stand out.
Okay. And so if you're set from the selling point of view, if you have a lot of properties that are on the market, or more so than there were just a few months ago, right? Or more so than there were last year, significantly more than last year, that's for sure. Then there's two basic things. One is the price that you price it at, and then two is the condition of your property. So let's just say the median price is 910, and the other sellers think that they're going to get more, so they price it at 920, 930, 940. In order for yours to look more attractive, you would want to price it at a little bit lower potentially. If you price it at 895 and they're at 920, 30, 40, then yours is going to look a lot more attractive, and it's their properties, their high prices are going to drive buyers to your property. So that's something to consider when you're in this situation, if you want to sell it and you want to drive activity. The other thing is the condition of the property. You have to look at the buyers at these price points, or in this market with the high interest rate. They're going to look at the condition. They're going to look at the kitchen. They're going to look at the restroom. You want to have your home decluttered. You want to have some fresh paint or touch-up paint, and those things. And so with that being said, Alex and I have been able. Oh, actually, this other quote I was supposed to put: the number of homes for sale is rising, giving shoppers more choices than they've had in years. The market is starting to rebalance. That's kind of just going over that stat. So we offer comprehensive estate services. Try to make it easy and stress-free, just like that one client we had. No out-of-pocket cost to him. He got money, cash, in his pocket before he sold, so he could take care of some other things. We can help you with these are just other things, Alex. I'm just going over with my.
Sure.
So we can do an estate. If you have someone that, if you're going through probate, or someone in your family died and there's a home that has a lot of things in the property, possessions and clothes and things. We can do an estate sale to get some of the items that are sold, get the items sold so you get money in your pocket, or sell a lot of the items online. We can do donation coordination where you get a $5,000 tax rebate, from tax write-off because you've donated certain things. We can get your property cleaned out. We can do a home inspection. We can make some repairs to the property, as we're doing for another specific client. That's going to help them get a lot more money on the sale. Rekey, staging the property, does all that stuff is no out-of-pocket cost to you, to help you, especially in this environment where you're competing with everyone else. You want your property to be in tip-top shape. So that's pretty much what I wanted to share, Alex. Alex, I appreciate you sharing the perspective for borrowers and buyers, and anything else that you want to offer, perspective, people thinking about looking into buying.
Yeah, don't be afraid to start looking if you're really interested. You can reach out, and I can give you a free consultation, or Luis can give you a free consultation. More than happy to speak with you and take a look at your financials and see what you can afford, because we certainly don't want to put you in a position where you're getting into a loan that you can't pay back, and I don't like doing that for myself, and I certainly don't like doing it for my clients. But we can sit down and talk and have an open and honest conversation and get you started in the process.
Okay. So your information will be here in all the videos. I'll put your links and stuff.
Okay.
The clips and all that stuff. So then if someone was to contact you, they would have how would it be? Would it be a phone conversation, a Zoom? Would it be in person? What would it look like?
Whatever's easiest. I do a lot of Zoom meetings, phone call, a lot of phone. In person, we can do in person if you like. I'm open to what makes it most convenient for the client.
Okay, and then so go over the scenario and see what's the program for them, and then they're going to have an actual application, right? They're going to fill out.
Right, and then our application, everything's digital.
Digital.
Yeah, so we have proprietary technology, and the way it works is once you say, okay, yes, I'm serious about buying this home. I do want to get pre-approved. Then what we do is we send you a link to our portal via email and your cell phone, and that's how you fill out the application. All the documents, you don't have to mail them to me or fax them to me or even email them to me. You upload them directly into our portal, which is very, very secure. That way you're not passing information, via email that can be hacked. So everything's very secure, very easy. And then once we get into the process, pretty much everything's docu-signed, and it's very, very simple now to go through the process. It's just you have to gather your documents.
Y hablas español, right?
Claro que sí hablo español.
Okay. All right. So thanks everyone for watching, and gracias, Alex, for being here. Appreciate it.
Gracias, Luis.
All right.
Buenas noches.